Hey guys, this is Blue Maroon, also known as, my name is Andy. I'm going to go ahead and talk through some of the trades that I took today, as well as things that I tried to go ahead and swing. So go ahead and, I went ahead and typed it all out, but we'll just go through them all one by one. Looking at IONQ today, I was able to catch this initial move on the opening break here. I was pretty excited. Basically, if we take a look off of the initial fiber here. So this move was pretty cool because I could notice that today, right, you had a 2-1-2 break on the day, as well as if you look over here on the week. Apologize for all these lines, they're kind of my targets. You had a 2 down, 2 up, and I would consider this a hammer, 2 down and 2 up reversal. So that's awesome. That's exactly what we want to see, right? You get a, you know, 2 up on the week, as well as something that triggers off a 2-1-2 rev strat. We love to see that inside up break. So I've got them marked out again on my Fiverr, but this is again not a move that I would consider something I recommend for beginners. Trouble is that because I trade options, I got to get in real quick. So typically I like to use that initial Fiverr as my kind of like guide, and when I see the second Fiverr kind of poke up red, I'm a little bit worried, but then as I see this kind of green shooting up, I basically just market order in quickly as I can to get in. Once it's in, I'm just pretty much trailing the Fiverr. This really requires you to hawk the chart and not be greedy. Like, this is not one of those days where the green just goes and goes and goes. I'm fully expecting the 30-minute flip as well as the hourly flip I've got to be really careful. If those start going red on me, I got to be like out of there. So I don't necessarily get the first Fiverr out, but I'm basically just watching it. As you notice, I have this kind of trend line. So as the price is like forming, I'm trying to like create this trend line to basically tell me that, hey, if I get a break underneath that, that's my signal to GTFO out of the trade. So, initial here, it's like, okay, it's good. And, you see that I have all these lines out, right? This is important too because you can mark out your targets. I've also got a little pivot indicator here to give me additional targets, because sometimes on the daily magnitude, you've got targets that are just spread so far wide apart, you don't know what's going on, right? And you want to really have those marked out before you enter the trade, as well as what your exit's going to be, right? So when I enter this trade, what's my exit, right? You have different levels of defense. So if I got in on this 2 up, right, or if I got in here on this 2 up, you can have multiple exits. It can be, for example, like the change in continuity, or it can be the low of the candle, right? It really depends on, again, where you enter from. But, if I'm using, for example, this first Fiverr as a continuity that breaks up, then, if I change the day from green to red, or if I make a new low of the day, right, those are all things that consider my level of defense. That being said, right, this daily continuity is and this low of the day is then ultimately a good line of defense. Problem is when the trade starts moving in your direction and you're all the way up here, you're not going to wait for the trade to come against you before you're out. You want to take profit, especially if you've made so much going up here, right? So what are we watching for? Well, we're watching for the flip, right? 5-10 minutes before the next flip, we want to make sure that we're positioned well, we're taking profit, right? If the beginning of the flip, the first 5 minute, right, is going to go red on us, we want to basically be out. So I'm going to this trend line, right? I'm noting the time, 7 o'clock. Okay, still okay, still okay. We're still holding above this kind of trend line I drew. Still good, 6 still good, right? And we're poaching basically 7:30. 7:30 is kind of like my, like, okay, I got to be careful, right? Okay, the first Fiverr of the 7:30 is red. It's not good, right? And then when I get this second Fiverr that goes against me, closes against me, right? And is also below my little trend line, get out. I'm already out. So I made a good 50% move on the contracts there. I didn't take anything crazy out of the money. Otherwise, I could have gone like way more. But I was doing weekly contracts, and honestly, I made pretty good profit there. So yeah, I mean, that was one of the trades that I took today. Definitely not an easy trade as well. So I'll go over another trade. Not too proud of it, but I'm just going to go ahead and go through them because I want to make sure that, hey, I make mistakes too. So Netflix was one that I took because I thought perhaps strat attack. And strat attack is basically the principle that, like, hey, if the institutions or someone is buying this on the first day on a Monday, they're probably going to try to buy it, the next day, right? Because if they buy it on Monday, it gets confirmed on Tuesday, They're probably going to be there all week trying to buy it, with the exception of Friday, because Friday is, you know, the last day of the week. It's kind of like, hey, you have a 60-minute candle, but it's the last 5 minutes, the last 10 minutes, you run into exhaustion risk. Your advantage or your edge within that hour is going to be gone. And just like in the week, that last Friday is your last day, so you don't technically really have that signal there anymore because it's pretty much almost gone, right? And just like the last day of a month or last week of a month, keep that in mind. So Netflix, I was like, okay, I saw the first fiver, tried to basically just get in as quickly as I could, just like with IONQ as well. And so this one just did not go. Eventually, when it went 2-1, 2 against me, changed the day from green to red. I was like, okay, I don't want to basically be in this mood much longer, because at that point, right, if it changes the day from green to red, it could literally just go 2 down against me, and I don't want to be in that. So that's basically a way to just keep your losses small. Is the trade gonna work for you? If not, don't be in there. In retrospect, right, I should have been a little bit more patient. I should have waited for the first fiver, waited for the second fiver to break above, right? And at that point, I could manage my risk a little better. But I mean, this is fine too. But just realize that, hey, if you're gonna be in really quick, you gotta get out really quick. Don't be married to your trade, right? It's kind of one of those, like, you know, manage your risk setups. So that one didn't quite work, but oh well. And then throughout the day, you know, I'm just scanning and scanning. But I did take Microsoft as well. This was one I mentioned that I just basically got stopped out of. I'll kind of just walk you through what I was seeing, right? So the day and the week. So Microsoft, as you see, went 2 down on the week. I was like, okay, that's interesting. But hey, you have another rev strat on the daily, 312 downside, right? That's exciting because not only do you have the rev strat on the day, you've got the weekly signal as well. And obviously on the month, it's, you know, red. On the quarter, it's not red yet, but what does this look like? Right, the quarter's not over, but if this really started going, right, Microsoft can make a 2 up red, failed, right, and then you have a situation where you can go 3-2 down next, 3-2-2 down next quarter. So just something that we're thinking about. But the month is definitely a 1 so far, but it's red, and you have that kind of weekly 2 down in force with you. So at this point, I'm not going to take it just on, you know, the break, which, you know, you could or you might or may not, but I'm going to be a little more patient, right? I get the daily break. And then I'm basically looking at the, you know, the 60s for an entry in. Ooh, 212. Wow, that's great. All right, break on the week. You get a rev strat on the day. Let's be a little bit more patient. Let's go to the 60s. Ooh, a rev strat on the 60s. Right, that's exactly what we aim for. You also had it on the 30s as well, and you could have taken this on the 312 on the 30s. But you know, the longer the time frame or the larger time frame you use, the more confidence you can have in that signal because it's a higher probability, right? A lot of times in the lower time frames, if you're trying to get in off a fiver, it's gonna be like Chop City, right? You're just gonna be up, in, out, in, out, in, out, like, you know. Whereas you stick on an hour or stick on a 30, you know, you can kind of manage that risk a little bit better. A little bit better, sorry. So, okay, Microsoft, right? I marked it out with a white line. You know, okay, that's my entry. I'm gonna try to get in there. Let's then move on to the fivers to kind of like get the sniper entry that we're looking for. Let me go ahead and just sorry. Let me just remove this pivot thing here just so I can make that more clear. So that's my entry right there. Same thing to note, and this is something that, you know, Phil will point out, I'll point out, is that you don't have to be necessarily the first monkey in the barrel. What do I mean by that, right? As soon as a signal breaks, you don't necessarily have to be the first one in. Unfortunately, I was, because I was just like so excited. But why is it that you don't have to be the first one in, right? What is the magnitude of this 21260, right? It's going to be right there, and we hit it. As soon as the fiver hits, right, your target is right there, right? So what do you expect when we hit a target? Well, you expect people to take money off the table. You expect people to take money off, right? So, for example, if they're in off the day, off a 15er or whatever signal up there, where is their target going to be, right? And we teach, you know, we teach that all of you guys to take money at your target. When it hits right here, you're going to take money off the table and you're going to sell. You're going to basically buy back, right? If you're short from up here, you're down here, you're going to buy back. And what's that going to cause when people buy back? oh, it's going to cause the price to jump, right? And that's going to scare you out because you're going to be like, uh-oh, is this a correction or is this a full-on reversal? This is going back up, right? You don't know, right? I mean, there's clues out there, things you can do, and that's where creating a level of defense for yourself, right, is very important, right? So, and this is a concept that you guys will learn, is how do we, in terms of setting a stop, there's two kind of big ideas that I've asked a lot of people about, and I think work well depending on what type of person you are. You're either a person that's type A, using option A, sorry, where you keep very tight stops, but you are able to re-enter as the signal triggers. So let's say you were that first monkey in the barrel, or you're just excited to get in. You get in, right? So you're in, but then this is, let's say, your entry, right? There's different levels of defense. So Rob Smith, the original creator of the strat, he always said that the entry is also your first level of defense that's considered. So he would say that, like, hey, if you're in off here, as soon as price breaks back up, you're out. In my experience, it's the safest option, but the problem is if you're in this, it's going to be like, okay, you're in, you're out, you're in, you're out, you're in, you're out. So there's a couple ways that you can kind of manage that, right? One way is, for example, you can say, hey, this is the first fiver right here of the hour, right? And I'll go ahead and try to mark that out here with a little rectangle, right? You can say, hey, if price goes above that, right, and turns that 60-minute candle, right, that's led by that first fiver, if it turns that green, I probably want to be out, because what happens if that's green, if that candle turns green, right? If this 2 down here turns green, you have a possibility of the next 60 flip going 1, 2, 2 back up, right? So that's your first level of defense you can have. The other level of defense you can have is, well, I want to wait for the next 60, and I don't really care what this candle does. If the next 60 goes 2 up against me, like it wicks against me, then I can be out. Or you can say, hey, I'm going to wait for a full 30 to wick me out. Or you can say that I'm going to wait for a full 30 with the body that closes against me to say I'm out. So those are two schools of thought. One is you want to set really tight stops, or two, you want to set yourself an appropriate amount. You'll see that I personally am comfortable setting my stop for a full 30 against me, with some exceptions. If I'm already up 100% in the contracts and like a 30 against me is going to cause me to go from 100% to 0, I mean, I'm not going to let that happen. Obviously, I'm going to take some profit when I'm already up 100%, and then set maybe a trailing stop for 20 to 30%, 25%, let's just, put it there. So that's the important thing we talk about with stops, right? Initially, when you enter the position, you want to give it either you want to give it very little room, and you want to just say, like, for example, on this fiver, which is what I was trying to plan to do with this trade, was, hey, if it breaks above here, like my fiver, and it turns my hourly from red to green, I was out. But then with that being said, as soon as it's up here, and it turns red again with this nice fiver that goes against and re-triggers my signal down and turns that hour from green back to red, then I got to be back in there, right? And that was kind of my problem, was I wasn't watching the chart, and I just thought, oh, I'm out. Like I didn't get back in. And if I had gotten back in, I would have gotten this nice move here all the way to the depths of hell, and then you could have just waited for whatever 15, 30, whatever against you to get out. It is what it is. We're learning here. Again, typically I wait for a full 30 to close against me, but in this case I was trying to manage it very tight. I take full responsibility for that, and I can say that the reason why there's two schools of thought is there's two kind of things, right? In one case, you want to manage your risk. You don't want your losers to become big red, right? If you have a very tight stop, like I think I lost like maybe less than 10%, whatever, on these contracts. Whereas like if you, on the other hand, it's like, oh, but you missed the trade. Well, I should have gotten back in, right? If you have a small account and it takes away your buying power each time you get into the trade and get out of the trade, get in the trade, get out of the trade, right? If you have a bigger account, it doesn't matter too much. But if you have a smaller account, then it's like, shoot, like I'm in, then I'm out, then I'm in. I only have like 2 trades left. Then I have 1 trade left in the day. Oh, shoot. Right, so that can be draining. So you may want to consider a wider stop. That being said, though, you don't want to get to a point where you're letting it go so wide that, hey, the trade's already against you, it's going up and up, and you're just, you're giving up on the trade because you're down like 70% or 90% of your contracts, and they're just worthless at that point, right? So you have to manage your risk. And I think there's a third option that I was considering, and I'm kind of experimenting slash researching slash looking into, is setting a stop based on like 1.5 times your ATR. So ATR is your average true range. The reason I like that is because ATR is kind of like, it measures based on the candles, like how much movement there is in that stock based on the last like 14 days, for example. So if you have market conditions that are just super hectic and stuff's moving a lot versus other market conditions where like the stock is just choppy as hell, um, then your stop or your ATR stop is going to be more like stable or give you more room depending on the market conditions, right? Because we always want to be adjusting to market conditions. We don't want to necessarily be doing one plan for all situations. They call it like different market regimes, right? So different regime, different playbook. You don't want to be running the same playbook every single time, right? Basically, cut it short. I set my stop pretty tight. I got stopped out for a small loss, but I didn't get back in the trade. Overall, I mean, it's disappointing I didn't get all of this, but I managed my risk well, and there's always going to be the next trade. So, no worries there. So I should have started probably late with this, but overall the day was just in terms of SPY, like I would say very choppy until the last hour. I felt like in terms of most situations, like a lot of stocks felt like they weren't doing very much until like finally the last hour, which gave you like a ton of action in my opinion. Um, so I was basically watching a lot of charts. Um, let's start with the first one, LLY, Lily. Right, Lily was cool. It was basically considered a kicker on the day. Sorry, let's go to Lily here. So Lily was cool. It was kicker on the day. So kicking pattern, you guys can look that up. It's basically like you have one day where price takes it down, closes down here, and then boom, it kicks up and it takes out basically the rationale is that all the people that like are down here, when the price gaps up like this, they're all trying to cover their position, which causes this thing to just skyrocket. So you guys can look at kicking patterns as well. It can also be the reverse where like, this could also kick to the bottom side where tomorrow it gaps down and, now these people are all covering their positions. So, um, so kicking patterns can be very explosive moves, as you can see from like the 30, right? You had this leap up, then down, right? And I always stress you don't have to be the first one in the barrel, you monkey in the barrel. You don't have to be the first one to take the trade, and you can be just like I said, you can just be patient. Like first 30 minutes, first 60 minutes, if you're not experienced, don't be in there. And sometimes there's just not action in the first 30 and 60 minutes. Like look at the stock, right? Look at the hour. It's so clear, right? If you were patient, 2, 1, 2 that counters the shooter, you could have been in there here. Okay, let's say you missed it like me. I was doing a lot of things. You saw me take other trades. I was trying to manage a bunch of stuff. I don't need to be in every single setup there is. But hey, I can keep it on my watch list, and guess what it does? 2-1-2. I missed the trade. Uh-oh. Oh, inside bar. What's next? Oh, another inside bar. That should get you guys excited. 2 inside bars, followed by a break. On this break, I'm like, ooh, I've been waiting all day. This is great because look, what's going on? 2 up on the week in force. 2 down, 2 up, kicker in force, right? Do we have targets above? Ooh, there's a gap fill. Do we have targets above that? Ooh, up here, up here, up here, up here. Another gap fill. I mean, this could go for days and weeks, but depends on how you want to play this. Do you want to just be a weekly guy like me and take this here? Do you want to take maybe a month out, 60 days, 90 days? Because look, okay, you got a 2 1 1 1 2. You're like, oh, this didn't go my way. This sucks. But if let's say this turns into a hammer and turns green, tell me what you got. I'm gonna give you 5 seconds. Did you get it? It's a 1 2 2 rev strat on the month, right? What's the target on a 1 2 2 rev strat? Oh, it's up here, right? Okay, let's look at the quarter. Oh, it's a how many days do we have left in the quarter? Like a week maybe? So if this, let's say, turns green and we can get the next quarter to go, what? 2 down, 2 up? What's the magnitude on that quarter? Oh, damn, up here. And if we get up here, do you see this PMG? Oh, 1 target, 2 targets, 3 targets, right? So that's what a domino trade is. Granted, it's very far out. Give yourself plenty of time, right? You don't necessarily need to look that far out because the move is not necessarily going to be green candle, and skyscraper up there. It's going to take some time. And honestly, right, I took next week's contracts. Um, I like just getting this move if I can get that. If the trade gives me a little more, right? Maybe I'll set a trailing stop once I'm up X percent, 100%, 200%, whatever, and I can get these targets up here. That'd be nice. And maybe I can get this gap fill up there, right? Or maybe I could have just taken weeklies this week, got this gap fill, and just waited for another entry, right? You know, you're always going to get these corrections to get you in, right? Broadening formation, so forth, right? So that's a Lily. I'm in Lily, holding that overnight. Looks pretty good, right? Not too bad. So Hood, I also took Hood. Hood's a little bit more complicated, right? Why do I like Hood? If you're looking at like the year, quarter, whatever, right? This shows you so much time frame continuity, so much strength, right? Two up, two up, two up, two up. So when you see all this, I'm not super worried because I'm thinking like, oh, this is just short-term minor correction. Like, you know, I'm drawing all these lines because they're like perhaps maybe the bottom of the broadening formation, right? You don't necessarily want to take the trade when it's up all the way here at the top of the broadening formation. Whereas, okay, you're down here, you have a bit more safety, right? Bottom of the broadening formation, reclaim the lows, and then where are we going to go from here? Oh, you have a 1-2-2 rev strat. Where does this want to go tomorrow? Oh, you take the top of here. From there, right, if the stock is strong, maybe you can go back to the highs. I don't know, right? But if I'm holding a whole bunch of contracts, right, I'm definitely going to take some profit off here. And that's going to pay for perhaps, you know, me to take more smaller contracts or pay for the rest of my position to be risk-free when we get up here. That's how you make big money, right? Take your money at your major targets because there's a lot of space between here and there, right? And then at that point, just let your runners run, and those can go 500, 1,000, whatever percentage, right? And be patient. You know, this is not going to happen in a week. If you want to give yourself next week's contracts, you want to give yourself 3 weeks out, 4 weeks out, even longer, right? You're not in a rush to make money because obviously there's these trades that happen set up every single day. There's always going to be the next one, right? So this is what it looks like on the day. On the week, yeah, I'll admit it doesn't look too great because what's this? Do you think it could go all the way up here? I mean, Hood is something of a monster. This thing can move. It's like the new Tesla, right? Or it could go right down. But let's say worst case, right? This maybe gets inside bar green and gets all the way up here. That's a good setup for next week. I'll take that, right? Got 2 targets up there. I mean, if a Friday it just goes monster move up, I'll take that too, right? But I have time. I'm not worried. I'm not buying myself weekly contracts and only have 2-3 days left on them to make a big move, and I'm scared at that point, right? I'm being patient. I got plenty of time. You know, give yourself time. Um, yeah. So why'd I get in? So Hood was just again choppy ass day, right? 2-2. Another thing you'll notice about me is I don't necessarily get in on the first like, you know, break. Typically, you know, you see me going on to like the lower time frames and be like, okay, hey, I got my signal. Let's get the fives. I want to see the 5 close above it, and I like to see other confluences, I call them, above VWAP, above my moving averages. I use you know, a 10, 20, 50, and you may see me have like a 100 or 200 on there. Not so much important in terms of like, because I've heard people use a 9, 21, an 8. As long as you find what works for you, and Phil's really good at this, so you guys should ask him about it. But basically, he uses a certain crossover technique on certain time frames. He's back tested it; it works for him. I don't necessarily do that, and there's nothing wrong with him doing it, me not doing it. I like to use it as just another level of confluence, where hey, if the trade is above those moving averages, then it shows to me like perhaps strength, and if as they cross below, maybe it shows weakness. And when you have this up choppiness action, then that's just kind of like indecision, right? But you know, you can use that on a lower time frame, higher time frame, whatever. And I use VWAP as well. Again, these are tools. These are not things. I'm not hawking the 5 to get into a trade, right? You guys see me. I'm like, okay, I'm on the week. Okay, I'm on the day. Why do I like it on the day, right? You know, it goes 2 down on the day, and you're like, oh, but that's a short, right? Well, no. If it goes 2 down and reclaims and goes above the signal on that 1 and turns the day back from red to green, that's a fail 2 down in green. And then what do we have? A 1, 2, 2 for tomorrow. And that's why I'm swinging in it, right? I'm hoping I get this target tomorrow. If it happens, great. If not, you know, I just got to adjust and see what the market gives me. right? So you have this on the 60. I'm hawking the 60 because the price action dead in the middle of the day was ass. So I'm just waiting, right? And I'm moving this. Okay, double inside as well. Okay, and you had this 2 that poked up. Did it get me in? No. Okay. So next signal, I'm on this 2 down. Maybe that's a hammer. 1 2 2, right? 1 2 2 right there, or 1 1 2 2. But it's, again, I treat it like a 1 2 2. Okay, that's cool, right? Okay, and so I'm just waiting. I'm being patient. I'm waiting for that first fiber to kind of like close above. I mean, you could have used the previous oneer as well, whatever, but this was kind of your entry in. I mean, even if you got, like, I kind of saw it late, so I was like, oh shit, I see this giant like green candle above here. Am I too late to the move? It like diddle dallies around here, but I'm just liking the fact that, like, I'm having confidence that it's gonna close green like this. So I'm like, all right, I'll take the trade. And somewhere within this mess, I got into like next week's contracts, um, somewhere out of the money, like 110, I think, maybe at 115. No, I think it was like 110. I didn't want to be that insane. And then he had this nice spike, so pretty cool, right? I'm in Palantir as well. I was also really eyeing Tesla. We'll talk about Tesla, and we'll talk about my like debate with myself why I didn't take it. So again, Palantir, same kind of rule where you're looking at higher time frame. Damn, that's green. Damn, that's green. I mean, it's kind of coming down, but like again, Palantir is a name that just has that kind of strength in it. See, I've got targets down here in case it kept going further down, but um, I'm gonna, if Palantir shows me it's gonna give the strength where it makes like a higher high, higher low, and 2 down, green up. I gotta play the price action, right? If the market's weak and it goes weak, and I mean it starts going down, I'm gonna play it short. I just gotta be nimble. I don't have a bias, but I don't necessarily am married to that bias. So, you got this 122 on the hour. I was like, ooh, this is exciting. So mark it out on my white candle there. So some days you'll see me get on the 30. Some days you'll see me on the 60. When the price action is slow, my recommendation to all of you guys, stick to a higher time frame, right? The 1 hour is good. The 4 hour is great too. Um, it was more obvious on Hood because like Hood 1 2 2 4 hour. Come on, guys, that doesn't get more obvious than that. You're seeing this, right? 1 2 2. You're seeing a 1 2 2 possibility for tomorrow, right? So on the week, it's not so. I'll admit to you, on the week, it's not so like you know clear. But hey, you got this 1 2 2 on the day, and it's got decent magnitude, and you guys know Hood can move, so why aren't you in that? All right. Sorry, Palantir. It didn't close as well as I liked, but I took it. Trade's there, I'll take it, right? I'm not gonna, if the trade's there and I'm not taking it because I'm questioning myself. I mean, why am I questioning myself? Trade's there, you gotta take it, right? So, hey, white line here. I was like, okay, trigger, green candle in, I'm in. So, it chops a bit, but I'm okay with that. And then you had a nice green candle that, and I was like excited. And then I got a giant red one. It's cool. It's fine. What's the setup for? Because I'm thinking, what's the setup for tomorrow? 1 2 2. It's gonna be 2-up continuation, but you got a target up here, and I know Palantir is strong. I've drawn a previous broadening formation here, so possibility to reclaim that. Decent move, 167. I'll take it. Maybe I can get it. Maybe I can't. But it's a decent move, and Palantir can move, right? And the other option is, I didn't take this trade, but I'll talk about it since I think it's worth talking about. You got Tesla here, right? This Tesla was just this week beasting. It's already hit magnitude on the week. This whole day was just like chop fest, chop fest. But you don't necessarily. You just want to be patient. These are one of these stocks that you didn't have to get in on the first hour, or even if you're late, you didn't have to get in. Last like hour, you got plenty of good signals. So white line here, that's your signal to get in. Drew it out here. So let's just, here we go. When's the first time it goes above that 5? Ooh, right here. Closes above VWAP, above moving averages. Again, you don't have to necessarily have as many confluences or have as many factors as me. Some people use things like Bollinger Bands, RSI, MACD. Again, you don't want to be hawking that stuff, right? I'm just looking at that for additional confirmation. I also use RVol. I also use volume. Those aren't exactly strat principles. If you guys are curious about them, ask away. Yeah, right here, 5 up. It just goes and goes and goes, rockets to the moon. At that point, Tesla was still inside day, so I just didn't have that like confidence. It already hit magnitude in the week, so I was like, okay, sure, Tesla can still move and go up and up, but I'm like, it's still inside day. I don't know how the confidence it can break out of it. I prefer that it stay inside, because then tomorrow I could get a 2-on-2 up, right? But you know, Tesla's gonna do what it's gonna do. I'm not gonna catch every single trade out there. That's okay, but I'm also, more importantly than that, I'm controlling my risk. I'm not losing a lot of money, because then if I have money, I can keep. There's always going to be the next trade out there, but you're not always going to have money if you don't act smart and you act dumb. So, yeah, this might be my first video. Hopefully you guys enjoy it. Feel free to give me some feedback if it's too long or too short. You have questions about how my process is. Go ahead and throw it out in the chat on in Andy's agenda. Thanks for joining me. Good night, guys.